All right, Bitcoin update. Here we are. We just got the move back up, right? This move back up, bounced right off of the 666, as always. All right, and so it's bouncing off of this. Does it mean that it's not accumulation time yet? No, it just means that you're getting reaction from this point, and we need to wait to see what's going to do inside of this range. All right, so these are the pivots. All right, you get the pivot set up here. Phase blue is coming up. Phase red is pretty much almost over. It's pretty much done already. Okay, so phase blue, no, phase blue is coming up. What do we see during this time? We have FOMC in the middle of all this, right? You got FOMC. Let me put this down. Vertical line. FOMC is, I believe, on the 9th and the 10th. So we'll put on the 10th. FOMC is happening after this pivot. Okay, and then you are also getting January. I think it's January 1st. January 1st, which is this one. Let's make this yellow line. Okay, so we'll make these yellow lines. These are events. Tariff takes effect January 1st. Okay, and what else is there? There's also like that tax, the tax harvesting that happens in between this time. Okay, so you can expect more dropping price action behavior, which means do we go lower? It's a high probability. All right, so where else do we have? We have, I think that's it for right now for these two major events. Yeah, it's FOMC and it's this one. Those are the only ones I really are focused on right now. So FOMC is here, so I would expect some sort of price action that's going to be moving like this. All right, this is my scenarios to where you would see some sort of reaction to this price and actually carry over. Was it today's Wednesday? So I would like to see this carry over by doing something like this, right? To where it would actually go right to that date after that, and then it drops, right? So it climbs up very slowly, and then it drops on this date, and it would drop down to a certain point to where it would be like this, right down to the same point like this. Let's put down this short-term trend, okay? This is just a short-term trend. It's only to show you a visual of what it could do. Doesn't mean it has to do this. Only for it to come back up, right back into this. This is the what do you call this? Is the January 1st? That's the tariff, all right? Some sort of inverse head and shoulders. Back up like that. Only for to do something like this. Okay, is what I'm calling for. What typically happens inside of these transition phases like this is that it goes back to the closest. It goes back to the. It goes back to the closest point that it started. Okay, like this. It came back to the closest point, but it's still got a lower range. It was at a closest point that is way down here. That is something like this in this area here. It doesn't have to stay down here. It's going to recover really quick. And this is where you can expect it to be some sort of inverse head and shoulders over time that will eventually lead over time back up. Okay, and this right here, I don't know what it's going to do, but that will be in January. And what is expected around that time is depending on how the tariffs are going to react, or the market's going to react to the tariffs, right? And at this point right now, it looks like everything's preparing to do this move right here. All right, so this trend line right here is one of the trend lines that I'm looking for this floor right here to sustain itself, and these moving averages to actually build its way in like this. Okay, to where this actually builds its way in, becomes resistance, and then it goes back up. As this thing just goes sideways like that, and then it goes up later on too, right? Because the price action obviously broke through. So this becomes a very long-term sort of inverse head and shoulders. Okay, that's the best scenario that you have in terms of going up higher. Okay, that's the best scenario. The worst case is that it just does this, but then it recovers. That it actually touches down all the way back down to that 20K. That's the worst case. Okay, but does that mean it's over? No, of course not. It just means it grabbed all the liquidity because there is gaps down here. All right, on the CME. So there's always a possibility of something like that happening, which means it's available. So this is why I'm saying you don't need to use leverage. Just take advantage of these moves like this. it's completely perfect to do it. Okay, so these are the scenarios that I can say that it's on the table. Does it mean you gotta watch this trend line? Yeah, this is the trend line to watch over time. All right, and then these dates, I really don't care about these dates as much as I do about the white. All right, but what matters the most is that these yellow events that are coming up here, they will be used to influence the market in a certain way. Right? So what I want to see here is this move here to where it does correct overall a really sharp move down for the V-shaped recovery move to go higher. That's the only way it's going to end up playing out. And I'm saying that because many times you get to see these things play out, and when you do see them play out, they end up to be one of these moves that are like, where are we at? Like, yeah, like this. They end up to be moves that look like this, to where they're like more of a megaphone pattern, like this. Okay. Does it mean it's got to go through? No, it doesn't, right? But the megaphone patterns, they're like almost everywhere when it comes down to how things are expanding and how things are contracting. Okay, just like that. Okay, so does this mean it's going to be doing perfectly to what I'm saying? No, I'm giving you the example of what it could look like. All right, so I could follow this too, and it could be just like that. All right, doesn't mean way the hell up there, but you see how it recovers out of it. But even this one recovered out of it doesn't mean that was it. It doesn't mean that it's not going to go and retrace lower and grab some more of the liquidity on the downside. Okay, the entire overall pattern that could play out, like I'm saying, is this could be a gigantic ass head and shoulders that could play out over time. That's why I say give yourself the move and the options in the range, even the possibility for it to reach these levels. And if it does, it's nothing to be afraid of. We're still, even if it falls down to 57K, it's still higher than 15,000, right? Still way higher than 15,000. So like, what do you need to worry about? Like, right? It's like, people were more excited at 15,000 than they were at 55. That's what I'm saying. Like, that needs to cool down. The excitement needs to come back. When do people get excited? When it's at the cheapest price, right? So what does that cheapest price look like? It looks like this below the 666. Okay, so keep in mind that that's the answer to this, is that anything that's going to accumulate below 666 is them doing it. It's the whales, right? So if you want to watch on how this actually accumulates, you watch the whales closely on what they're doing, not watch the news, but watch what they're doing. All right, and you can see it through the charts. The charts show you, even though they're lagging a bit, right? Even though they're lagging a bit, they still show you. So if you be patient and let it show you, especially these averages, stick with the averages. They'll take care of you pretty well. All right. Yeah. So that's it for Bitcoin. Okay. There's not much to it because overall the entire move is still catching up. It's still catching up. It's still showing itself. So like, it doesn't mean it's over. This just means that get ready to accumulate because you're almost there. And this recovery here is nothing but a short term getting back up. And you want to see it really show itself by shorting the crap out of it once it gets to like 100K. Seriously, if it gets up to 100K, I'm shorting it. Why? Because that's what it's telling me. Every time it's made over the 21 while it's in distribution mode, it has sold off. Okay, it's been selling off. Only a matter of time until the bulls get exhausted and then it drops, which means that you got 1, 2, 3 wave drop. You know, right? 1, 2, 3 unsustainable, right? 1, 2, 3 drop, right? So I'm saying that at some point, even the downside 1, 2, 3, and then it's going to recover. So no matter what you see, if it gets back up here, these are your levels. And if you really want to know more, just turn on your CPR and you can look at it too. Even the CPR range is saying that your resistance is sitting at 107 and your resistance is sitting anywhere from 95 to 100K, right? Inside this range. Even these support might get flipped to resistance, okay? So I'm saying that you watch out for that and the confluence is there, right? So yeah, that's Bitcoin, all right? Super simple. It takes a little bit of time only to look through this. You don't need to spend that much time on this. As you can see, 93K is barely even, it's holding because it's just constantly bleeding out because they're distributing it again. You got a wick like this. You know what these wicks are? These wicks are distribution. All right, those wicks are distribution. You just don't see it, but they are distributing. So if this doesn't hold on us, I'm not surprised. Losing the 21. Let's look further down. All right, let's look further down. Where did we go? Same thing as this, to where the trend could be sitting up like this for the time being. All right, the trend could be sitting between this low and that low in the wick. All right, and you want to see this 21 break the trend. When the 21 breaks the trend like this, you already got the death cross. Once you get the death cross, then you start to see this guy come down. When this guy starts to come down, that's when you start to see price action already down here. And then if it's down here, start looking for accumulation, because FOMC kicked in and it came down. That means that they're selling it right into the people who are going, they're printing money or whatever the case is, QE, whatever the case is, rate cuts, but yet the dollar is getting cheaper, yet why is the price going down? Because they're dumping it into your face, all right? It's accumulating at the same time. So when that's happening like that, you also got the tax stuff too at the same time, and then the interest rates, not the interest rates, but the tariffs. Okay, that's going to take effect too. So it could be multiple narratives that play out at the same time. It doesn't mean it's going to be dumping like that all the time though. It will recover right back away like this too. If it's going to BART, it'll do the BART thing, come right back up like this, and then slowly decay again, and then BART again, and then slowly decay again, right? It's how you get megaphone patterns, right? So it's like, no matter what, look at the chart, look at the price action, and let it tell you based on what it is that's guiding you, which is the moving averages. Because it's going to dance around the moving averages. They're always going to come back to it. Okay. All right. So that's it for Bitcoin. If there's any questions, just ask. All right. Laters.